This panel is all about cross-collaboration, and cross-collaboration between MENA markets, Middle Eastern, North African markets, and also with international markets like Asia and Europe. We have here a very impressive lineup of panelists. We've got Nujood from Saudi Arabia, Promoth, originally Indian but living in the UAE, so I'm gonna just assume you're Emirati. Waleed from Egypt, and Yasmin from Bahrain. Before we kick off the conversation, I'd like to understand and basically explain to the audience what is the makeup of the Middle East and North Africa region. Is it one market or it's multiple markets within one? Maybe Promoth, you can give us some information about the Middle East, North Africa.
Thank you, Mirna. I think looking at MENA as a homogeneous market will be a wrong start, and that's the mistake many of the players, whether it's on a FinServ or on a FinTech, really do that. It's a very quite diverse market in terms of the maturity, whether it's digital maturity, maturity in terms of infrastructure, in terms of regulatory, consumer behavior. It is all varying. For example, if you look at it, even the digital maturity, the mobile subscription rate of MENA is at like 133%, which is above US, which is 106%, or at par with Europe, which is 125%. But within that number, if you look at it, you've got markets like Yemen, which is at 70%, or UAE, where I come from, which is at 200% of kind of doing that. So it's quite very, very diversified. And also, if you look at the population demographics, specifically if we look at the youth advantage MENA has, so you have got almost like 65% of the population which is less than 30 years, or a market like Egypt, which is 50% less than 30, is a great demographic dividend. And also, if you look at the one of the things which we personally track at Finablr is specific in the financial inclusion. That's a very important problem to look at it. If you look at the World Bank index, if you look at it, Middle East, North Africa is one of the lowest in terms of financially including people. So in the adult population, nearly a fifth of the population is financially excluded. But if you exclude some of the high economy markets, like in GCC, that number goes to almost 43% is the kind of the people are included. So which means that it's quite a very diversified market. But the interesting thing is that the opportunity is massive. If you look at the financial inclusion is not up to the mark, it's a fantastic opportunity for people to come and solve. The demographic dividend is a fantastic opportunity you could solve. Or even look at the mobile penetration on a smartphone basis, which is at par with the global average of 63%. It's a fantastic opportunity. One could really use it and scale solving the problems.
Okay, so we're here talking about kind of two clusters, the GCC and the North African Levant. Let's start with the Gulf, and we've got here Nujood from Saudi Arabia. And Nujood, every ecosystem is built on four main pillars, okay? You've got the talent, and the Middle East is known for its talent. You've got the capital, and you know, we have the world's largest sovereign wealth funds. You've got the infrastructure, and as Promoth said, very high level of penetration. And we also have the institutions, which is the demand side for innovation. But the most important part of all of that is the regulatory environment. Can you tell us more about Saudi ecosystem? What's so special about Saudi Arabia? What are the opportunities? And what are the regulators doing to actually attract fintechs into the market?
So thanks, you covered basically the main pillars, as you said. So when it comes to Saudi Arabia, the regulators basically initiated the FinTech Saudi as an ecosystem developer to just connect all the dots together, understand more where is the demand, especially that we have already transformation through the Vision 2030, and we have numbers that we wanted to achieve in terms of cashless society, in terms of SME lending or savings, or even raising capital assets in the market. So we have the right direction and the targets. And as you mentioned, when it comes to FinTech, we need regulations. So SAMA and CMA, the Capital Market Authority, and the central bank launched launched the testing environment, which is the sandbox and the FinTech lab. And they started looking at different solutions as for FinTechs to be emerging players to achieve these numbers. So I think we already have reached to a very progressed level in terms of payment regulations and the payment institutions overall, which is, when you look at FinTechs, payments have always remained the number one impacted industry for FinTechs, and then the lending platform. So these are already in the sandbox for testing and to be regulated very soon. And then we look at the Capital Market Authority. They're looking at the robo-advisory solutions and the crowdfunding, equity crowdfunding solutions. So I think Saudi has already moved very fast and quickly in the last 2 years. We have more than 29 FinTechs in these testing environments, and once the regulations are, and they're already working on the market, but once the regulations are already out, we're going to see more and more of either merge FinTechs together, they're going to merge together, or going to, scale somewhere around the region, and we hope that's going to be globally as well.
Do you see next year the regulators moving faster than what we've seen before?
Of course. I mean, we're very close to issuing payment regulations, hopefully within this year, maybe December, and that will push all the payment institutions to come and play and perform payments, whether they're wallets or payment gateways or initiators.
I'll come back to the initiatives in Saudi at a later stage. Let me jump to Bahrain. Yasmin, Bahrain is known to be a small market, but very, very progressive. It's been the hub of financial services for so long, conventional and Islamic, and now you guys are spearheading in terms of regulations. How important is the opportunity in Bahrain? Do you see it as a Bahraini opportunity or a springboard to the whole region?
So to answer your question, Mirna, first of all, technology from one end is changing the whole dynamics of the financial services sectors around the world. So we have technology from one end playing a big role, and then we've got from another end demographics, very youthful generation that are forcing incumbents to really innovate and to meet their changing needs and expectations. And we realize at the Central Bank of Bahrain that in order for us to maintain the level of efficiency and excellence within our financial services sector, we have no choice but to ride the wave and to open up and to foster more innovation and to encourage our incumbents to actually innovate and to partner up with FinTechs. Our journey with FinTech actually is not very recent. We started back in 2014 when we first issued our regulations on payment service providers, allowing more innovation within the payments industry. Allowing non-bank institutions to actually tap into this market. Today, we have the first onshore regulatory sandbox in the whole of the MENA region. We have issued a number of regulations to support the innovations, and we really view the regulatory sandbox as a catalyst for innovation because a lot of these regulatory reforms have been a direct result of the solutions that were tested within the sandbox. The sandbox was launched back in 2017. Today we have 34 companies operating within the sandbox. We have 2 companies that have graduated successfully from the sandbox and have gone on to receive full operational licenses. We are continuing to engage in more regulatory reforms. To answer your question as to what opportunities I think the MENA or Bahrain holds, there are a number of FinTech hubs starting to emerge in the MENA region. For example, Bahrain, the UAE. We're starting to see other regulators in the region starting to be more proactive and reactive in this sense. And the reason for these hubs is mainly I would think, due to 3 main reasons. Number 1, having the right mindset, being very adaptive, being very proactive and responsive to the changing dynamics of the market. Number 2 is having the regulatory as well as the legislative foundations to enable such innovations. And the third factor is to have an enabling, business-friendly, startup-friendly ecosystem. In terms of Bahrain, we have a track record as being a very business-friendly kind of ecosystem. We don't have any thresholds or limitations in terms of foreign direct investments in Bahrain. Our sandbox is actually open to startups from all around the world. And a huge portion of the startups within the sandbox are actually from Asian countries as well.
I'll come in a minute to the real value of the sandbox and how important it is for startups, because we have startups here. Let me just understand the makeup of the audience. Non-MENA audience, please raise your hands. I just want to know how many of you are not familiar or not from the Middle East, North Africa. Can you raise your hands? Non-MENA? Okay, we have a good portion here, so let's drill down into the details. Now, it's very interesting to hear, government officials. I'm assuming you guys, both you ladies, are government officials. So I'm gonna be the devil's advocate here. I'm gonna stand with us to the side of the fintechs, and I will ask you, Waleed, how important is the sandbox and the kind of regulatory environment that is being built in Egypt and basically outside, before we get into the cross-border level?
Right. Well, first
Tell us more about PaySky as well.
All right, sure. PaySky is a payment solutions provider. Basically, I've been in the payment space for the past 15 years. I used to lead innovations at Visa for the Middle East and Africa. And then I moved to London to manage strategy for this region. And it was obvious that electronic payments were not picking up for so many reasons. And being the size of the scheme and that I used to work for, and the banks, the disruption and radical moves in the value offering was not that easy. So I thought there would be a gap in the market that needs to be solved, and hence left Visa and built PaySky. Basically, it's the evolution of what the traditional payments infrastructure should have become. It caters for all the different stakeholders within the payments equation, transactional banking in the market. So factors in banks, regulators, telecom operators, wallet schemes, as well as new fintechs with all the disruptions. Building a complete ecosystem of payments, if you will. On one side, it's an omni-channel payment gateway to enable businesses accept payments through all different various interaction channels, whether it's face-to-face or through POS or MPOS, delivery channels, online channels, and mobile apps, and APIs and integrations. And on the other side, we're also fueling supplying consumers with a very simple digital financial service offering in form of a card plus app proposition. Can think of being Revolut of this region, that basically would create an ecosystem and network effect for the consumers to transact on this newly generated infrastructure. But then coming to this region and with the specific challenges of this part of the world, where first of all, the bank population is very low. So in Egypt, it's 33%, 23% in Iraq, 15% in Yemen goes down, 15% in Sudan goes down to 5% in Yemen. So without an already included financial population, how would you offer financial services that would scale? So we had to think of non-traditional way of scaling, one of which was basically building the ecosystem, two sides of the equation, not just sticking to one side of it, like traditionally would have done in other developed markets. But the other one was actually considering, in order for us, all of us, to reach the critical mass and for all of us to start generating revenue at a valuable point, we considered the new model, which is the licensing model and white labeling model. So we started to offer our platform to existing financial institutions and existing incumbents. So instead of actually David defying Goliath, David worked with Goliath.
That's your collaboration with the institutions, basically.
Exactly.
Okay.
Being banks, central banks, posts, telecom operators.
Did you need regulatory approval to do that, or it was you just used the bank's license?
Well, in order to operate in the market, the banks would be regulated and licensed and regulated by the Central Bank of Egypt. But what we did actually, and what was really groundbreaking in the Egyptian story, is that the central bank, well, I can say we were lucky that at the same time we've launched the services in Egypt, central bank had a very aggressive and ambitious electronic payments and digital transformation agenda. They formed a National Payments Council headed by the president himself. You can imagine the political will behind transforming and becoming digital. So with this happening and us launching, there were a lot of synergies that we could do together. Really appreciate the valuable support that we got from the Central Bank on this.
Amazing. Thank you, Waleed. Nujoud, Waleed gave us an example of a startup collaborating with regulators, okay, with the central bank. Saudi Arabia, you said, has some 20, 30 fintechs. So it's very important that we open the market up for international fintechs to get into the market, for Asian fintechs to enter the Saudi market. And it's fascinating how when I received an email that I can get an e-visa as a woman getting into Saudi, it was like, oh my God, the world has changed. What has changed in Saudi Arabia and how attractive it is now for Asian fintechs?
So Asian fintechs overall are known by being customer-centric, and they provide services that are very well tailored. I think one of the top 100 global fintechs around the world is 34 are from Asia. So it's very important for diversity in terms of the industry as well when it comes to our region. But just let's go back a step and understand what's happening in Saudi specifically is, at this point, is going through the regulations. And once that is done, of course, the door is open. Saudi is overall a free market. Anyone can apply for a license once the license is ready. So people see the sandbox is a sword with two edges. One of them look at it as a step forward, and some of them, they think that's going to take longer than expected for certain regulations to be around. But the good thing is, as I said, Saudi is moving very fast. Payments will open the door for more international players. But most important for Asian or other global North American fintechs, they need to understand the demography and the needs of the Middle East and specifically Saudi, and look at what are the strategic partnerships they need to form locally, whether with the banks or whether with local fintechs or whether with other investors in the region to scale. So I think by next year we're going to see more of, as I said, partnerships between banks, between startups, because banks are moving as well into that direction. Not all of them wants to build their own solution. They're just pushing for more collaborations with fintechs to unlock the markets for them. So I think the weight is going to be very heavy on many fintechs to come and add value strategically for banks and for the market. So I think, as I said, regulations will open the door for everyone to come.
I think it's going to be a race between Saudi and Egypt next year. Let's see. Let's see who's going to win.
Mirna, can I just add to that question?
Yeah.
You asked what are the opportunities for Asian startups within the MENA region. I think there are huge synergies for GCC and Asia. And the reason for that is we have a substantive population of Asian expats within the GCC region. So there are huge opportunities for startups to tap into that market, to provide, for example, remittance services, cross-border payment services. For example, in Bahrain, we have rolled out the wage protection scheme to enhance, foster more financial inclusion. Through our national electronic wallets, they're also starting to provide solutions for enabling remittances from Bahrain to different Asian countries.
But Yasmin, I mean, let's be honest here. Not one single market in MENA is good enough for fintechs, okay? You guys have very progressive regulations. The market is too small. You have the funding and maybe the talent, but it's still moving on. Egypt has the market, the largest market in the Middle East, but still we need more cash pumped into Egypt. What do we need in terms of regulation? And I'm going to ask you now about
collaboration.
Okay, so yesterday you signed an agreement with Egypt, okay? Let's put the PR and the pictures and MOUs and all that on the side, okay? It all looks good on the spot, but then so what, right? What does that mean for the international fintechs and for fintechs like Waleed? I mean, when Bahrain and Egypt collaborate, what does that mean?
The real value for fintechs and startups is the ability to scale up. Technology is really, it's breaking down the borders between jurisdictions. So what we have to do as regulators, it's extremely important that we get together and try to harmonize our regulations. First of all, in order to avoid any regulatory arbitrage that may occur due to cross-border financial services occurring. Second of all, to enable these startups to scale up at a more agile kind of way.
Are we going to see passporting?
We hope so. It's definitely on our agenda at the GCC working group.
Okay.
I'm not going to lie, there are at the current time a lot of challenges, and the main challenge is that we're having some regulatory gaps between the different countries. But I think that eventually passporting will have to be there.
Okay, maybe when you have open banking now, I mean, if Egypt and when Egypt starts with open banking, then that becomes a much easier proposition. We're going to talk about Egypt in a bit, but Promoth, back to you. As an institution, you once announced that you're going to invest some, was it 200 million? You still 200 million or you increased that?
250.
250?
250 million.
Increase that or still 250?
Still same.
Still 250. You want to invest that in fintechs. What types of collaboration do you look at when you start having that conversation with fintechs? Is it an acquisition? Is it a JV, as Nujud mentioned? For the Asian fintechs coming to the Middle East, North Africa, what do you offer them?
So from on the first part of the question, if you look at it from the what is the kind of approach that we take on investments on that? The first thing that we see is that, what are all the compelling problems the fintech is solving? I think that's a very key component of that. Because being a large FinServe organization, you don't have the mindset. You may not have even the skill set to really look at the problem differently because of the legacy infrastructure that you have, the kind of overheads you carry. And what we see working with the fintech in the last 3 to 5 years on a different role. So we do mentorship, we do incubation, we do as well as JV and investments as well. So we do have all four range of things of doing it. So what we have seen is that they bring a newer way of doing things that brings to doing it. So first thing is that what is the problem it is solving it. Secondly, and more importantly, specifically being on cross-border payments, one has to be very pragmatic. How does that fit into the regulatory environment? That's a very important aspect, because once you fit into the regulatory environment, you can drive adoption and usage, and that's where scalability really comes in. As a global player operating in 45 markets, moving $150 billion of volume, we really look at scale. Scale is a very important aspect. So you can get the idea, you could get the institution from one country, you need to transcend the boundaries and get the scale. Thirdly, and more importantly, we believe commercial viability. It's very important that it be commercially viable, the kind of the investments that we do. The proposition meets solving the problem. The proposition means that it is fit for regulatory purposes. Hence, you can drive adoption and usage, and very importantly, commercial viability. We believe that, we specifically being self-funded, being public company, we don't take a route of burning money in terms of acquiring customers. So we're quite clear that how do we bring consumers in by driving the product as the use case. Could be a C2C, or could be B2C or a B2B even. So commercial viability is another element that we look at it. So we got a host of things. So we have a great beneficiary of that. We did around, in the last 3 years, around 12 acquisitions, ranging from different kind of a size. One was a large acquisition for us, which is in terms of scale, but others were all in, high single digits and in double digits kind of an acquisition that we did to do that. So what we have helped us is that it's helped us in broadening our payments capability. For example, we acquired a company called Switch, which is a digital gifting company on a periphery, but underlying we use the technology of DLT, where we are doing a P2P on a DLT basis. So we really embed that of doing it.
Do you know what PaySky does? I mean, did you know about them before?
Not really, at this point of a time, because it
Can
is
we
a
get
market.
some pen and paper to sign an MOU, please, right on
So,
stage?
it is a market that we have seen, and we have definitely seen, and as an institution with 38 years of history, we have always seen that working with the fintechs also give us, a good check, and internally as a culture among the people as well, a great challenge in terms of mindset as well. And we have seen that the acquisition that we have done in terms of structuring, we do a loose integration. We don't integrate them into the mainstream and take advantage of the agility. We want to make sure that the team is agile of going to do that. So it's a framework that we continue to see of doing it.
Promoth, you're a lover of the Egyptian ecosystem. We've had this conversation before, and every time I ask you, what are you looking for? You say, find me an Egyptian fintech. We have here, Rasha, can we get a microphone, please? Ayman is here. Ayman, can we have a microphone, please? Microphone. Ayman, do you want to come to the stage? Please come. I'm serious. We can't talk about Egypt and you're sitting with the audience. You've got to join us here.
He's the vice governor.
Hello. Please, تفضل. Najud, can you please give him? Okay, so Ayman, best quickly introduce yourself and tell us what's going on in Egypt and how important is the regulatory changes that are happening in Egypt, especially that we are now in Asia, and there's a lot of similarities between the demographics of Asian markets and Egyptian markets.
I'm Ayman Hussein, Sub-Governor, Central Bank of Egypt, responsible for payment system and business technology. What we are trying to do in Egypt as a regulator is that we are trying to lead the transformation of the society into a less cash one, or as we heard in the morning, a new expression, a cash light society. So we have a complete framework in order to provide the infrastructure for the ecosystem from regulatory perspective, from legal perspective, from financial market infrastructure perspective, cybersecurity, consumer protection, digital and financial literacy, tools for payment and tools for acceptance. We are trying to introduce new concepts like merchant aggregators, like payment facilitator. Also, we are releasing on a high pace several regulations that can help the ecosystem and can help the private sector to contribute into the ecosystem development. We have our national payment scheme. We have just reached 3 million subscribers in less than 10 months since we launched early this year or late last year. Also, we are trying to boom the acceptance. We are trying to increase the acceptance infrastructure from 90,000 point of acceptance into 1 million point of acceptance in 3 years. Even on the FinTech level, which is the topic today, we are trying to provide funding. We are trying to provide matchmaking through having our FinTech hub, which provide matchmaking between investors, between accelerators, incubators, startups, whether on a physical format like the physical hub or on the portal level. Also, we are trying to provide that kind of matchmaking. And also the point that I see very good in progressing with helping the ecosystem, when we collaborated with the startups, the banks, the incubator, accelerator, to develop the problem statements with Egypt. This gives a sign that the government is caring about providing the requirements, that each startup or each innovator is looking to know what are the problem statements that the government will encourage and will have a quick access or fast track to get license and to get business out of these ideas. So I'm hoping that this kind of problem statement help in better growing this ecosystem.
I actually attended the workshop when we came up with the problem statements. And what's interesting is we started with the pain points of the customer. And this is the right starting point. Waleed, you have here regulators, you have Bahrain, you have Saudi, you have Egypt. What do you expect from regulators, and how important are these cross-border collaboration agreements that are taking place? I mean, I know Egypt signed an MOU with MAS. Saudi, have you done any? I think you're with Abu Dhabi. You work closely with Abu Dhabi Global Market. So how important for a startup from the Middle East and North Africa region to have this kind of collaboration between the MENA markets?
Right. It's a very good question. I've attended so many FinTech events, and during the sessions, there were always sometimes some polls or surveys on what is the primary hurdle for FinTechs to scale. It was always regulations as the first point of selection of the panel. So there are so many things that can be done that will help the whole ecosystem to grow, starting by having a homogeneous regulation. So instead of having each and every central bank and each and every market developing his own local regulation, I would strongly encourage having the idea of the a collective work of having a regional, a pan-regional, like a pan-European regulation in that particular space, like the SEPA. This eases a lot of hurdles on the fintechs entering and penetrating new markets and going there. The other one is passport licensing and passporting. So if we would get licensed in one market of this unity and then we can work across the other markets, not only this will save a lot of investments that we need to go and incorporate and comply with the local regulator, but will also help us scale very, very quickly, because out of Egypt, I can start to issue cards in other neighboring countries that will still be compliant with the local regulations and local monitoring, yet will allow us to go to market much quicker. Thirdly, sandboxes, of course. Boxes would be a very good environment for regulators to invite the market to try and taste the proposition with very limited and controlled environment with minimal risk. We're seeing this happening already in the region. Egypt has already launched a sandbox for the eKYC space, and there should be many more in the future, inshallah. And fourthly, I think having this collective task force would create what we can call a cumulative innovation. So instead of Egypt coming up with their own proprietary implementation of wallets or cards, and Bahrain coming up with their own implementation of an infrastructure of a payment gateway, if there is this collective activity, then we can all add much more, and the synergy out of this collaboration would be much more than each of us running alone in this.
Thank you. Najud, what do you think of this wish list?
Amazing, but I think it needs bold move from governments together to look at what they want to start harmonizing, as we say. And I think we're already on a GCC level. We have already started to discuss the possibility of looking at making the fintech journey around the GCC easier when we understand why we're just putting these differences in regulations. Does it make sense or not? And we have many committees, like one on the GCC committee and one on the Arab level committee, just to look at the risks and how we can reduce it, and if there's a chance of getting a closer regulations around fintechs. So I think it makes sense, but it needs another push from governments to believe in it, of course.
Maybe a takeaway from what Waleed said is regulators and governments need to spend more time with the fintechs. Actually, I know Egypt central bank does that all the time. We have regular roundtables. Maybe we need to be closer to the people who are closer to the consumer.
Of course, I mean, fintechs needs to make sense when it comes to the market and the added value they're proposing when on their services, and they need to survive as an startup, as an enterprise on their own. So definitely, we have made a lot of progress in terms of communication between different jurisdictions to understand the nature of the fintechs moving forward.
Thank you, Promoth. Your headquarters in UAE, and wherever I walk around here, I ask people about MENA, and they say, oh, Dubai, oh, Abu Dhabi, or what has Dubai, as in DIFC, and the ADGM, what have they offered to the market so that they have positioned themselves as you know, kind of financial hubs in their own world, despite the fact that the central bank is not very active compared to other central banks? Is it more of a lifestyle proposition, or is just a historical kind of, you know, like trade flow between East and West?
I think it's, if you look at MENA at large, or if you look at GCC or UAE in specific, it's very early days in terms of looking at fintech at a large and also to the regulation. But having said that, have we done enough? Yes, we've done enough in the last 3 to 5 years. If you look at context, you mentioned about Asia as well as in MENA. If you look at some of the key markets in Asia and MENA, you will find a lot of similarities. Look at India, China, or even Singapore in Asia, or your markets like UAE, Saudi Arabia, or Turkey. These markets are heavily internationally linked up globally, right? And many of the characteristics of these markets are also very similar in terms of being an emerging market or a frontier market. They've got tremendous growth opportunity. But the difference that you see in Asia versus MENA is that if you look at the last 5 years, I want to use financial inclusion as the one metric every time. That's the way we look at it. 5 years back, Asia's financial exclusion percentage was, English was 31%, which has jumped to 70% now. So whereas in Middle East, North Africa, if you look at it, it was 33%, it moved to 43%. So it has moved by 10 basis points, but compared to Asia, which has done from 31% to 70% of inclusion. So you have got tremendous amount of opportunities to look at it, which means that we can't solve the problem in the way we have been solving so far. We need definitely a different mindset. We need to definitely look at a different way of fulfilling that. There are still problems. And equally importantly, you mentioned about Egypt. I'm a big market fan of that. From an access of talent, the kind of problems those markets have, that could be one market where you could drive consumption, and also you could take that into beyond the boundaries of the Egyptian market. So it's still an early start. Quite a lot have been done. And specifically between ADGM and MAS, there is a close collaboration, which we have also been a beneficiary of that. We work with ADGM quite extensively on that basis. And equally in Saudi Arabia. So we are one of the 3 sandbox providers we got licensed out of Saudi Arabia. We take great pride in that. It's a big market, and we look at that as a market to really transcend beyond. So it's a MENA at large agenda. We have sold 85 million people who are financially excluded. We have got a huge opportunity to go and solve that problems.
Amazing. We're going to come later to our message to the Asian fintechs and regulators. Yasmin, what do you learn most from Asian counterparts? So when you go and collaborate with MAS or any other market, what do you learn from them?
Before I answer that question, Mirna, I just want to touch a little bit upon the earlier discussion on cross-border collaborations between regulators. Now, while that is very important in today's time and world, but I think there are important elements that have to be incorporated within each jurisdiction before we jump into cross-border kind of collaborations. Number one, there has to be internal collaborations within the jurisdiction between the government sector and the private sector. And in Bahrain, for example, we have something that we like to call the Team Bahrain approach. It was announced by His Royal Highness the Crown Prince around 2 years ago. It's basically about the government collaborating with the private sector to come up with agile, quick solutions for startups. So that is extremely important. That's one element. The second element is to have the regulatory and legislative foundations in place, because unless you have those in place, you won't really be able to benefit much from collaborating cross-border.
Yeah, but at the end of the day, I mean, creating Team Bahrain, you can do that over 24 hours, right? Creating Team Egypt, that requires the pharaohs to wake up again and bring the market together. It's much harder, right? I mean, moving an economy like Egypt and convincing everyone. We do understand the speed that Bahrain has been going with, but we don't expect anything less from Bahrain. Honestly, you guys are very small. You're intimate, you know.
And the tone
unlike Saudi or Egypt, where you've got a lot of stakeholders and a lot of education, a lot of financial literacy. That was one of the subjects that we had.
And the tone is set at the very top for us. And I'm not just saying this because His Excellency is sitting right here, but
Your Excellency.
The tone is really set at the very top. I mean, in terms of we are a very agile regulator. We have been amongst the first movers in the region to have a FinTech and Innovation Unit and to embrace FinTech and Innovation and to take that risk. Because we really realize that the whole world is moving towards that. And unless we do, then we're going to lose out. Coming to your question on what we can learn from Asian startups.
Before we get to Asia, I want to ask you, Ayman, one thing. Bahrain does something very well, which is interesting. You know, you want open banking? Everybody, by end of June, show me how you're going to do open banking. Does this apply to Egypt? Can you be that aggressive and say, you know, just this is a deadline for you, you've got to stick to that? Or you think that you don't want to take that risk of going really aggressive on opening up the market?
I think we did it before when we mandated the interoperability of all mobile money stakeholders. We gave them a notice period of 6 months, and all have to abide within the 6 months to implement the interoperability and make it running. But this has to be an educated decision for us, because before mandating something on banks, we have to avail for them the rails to go the way. So before we mandated, for example, the interoperability, we had to make sure that the interoperability engine is in place, who will be playing the role of the engine, and so forth. For the open banking, what we have done so far, that we have catered for the open banking within our law, because we are updating the central bank law and the financial sector or the banking sector law. So open banking is one of the parts within the Payment System Act and the technology part within the law. So having passed this step, we have the legal framework in place. Second step is to make sure that banks are ready to implement this mandate. But before that, we have to make sure that we are availing one playing field for all the stakeholders of the ecosystem. We are trying by open banking to deliver or provide access for PSPs and FinTech innovators to have access to bank accounts. On the other side, we have to avail the data of the telco operators and utility providers for banks and PSPs to start doing behavioral analysis for better credit worthiness analysis. So we need, and in collaboration with the other regulators like the NTRA, which is the Telecom Regulatory Authority, and the Ministry of Communication, we are trying to provide this baseline for PSP and operators to have access to bank accounts, and for banks and PSPs to have access to the data that the utility providers and mainly the operator have, and that help in assessing the credit worthiness of the customer to provide them with better access to finance.
Okay. Yasmin, now you're collaborating with Egypt and you signed, and I'm assuming open banking is one of the things that you're going to start looking at. There's a question here from the audience that says, have there been previous successes or failures from cross-border collaboration? And that brings us back to our to my question in terms of collaborating or learning from other regulators out there. What have you learned to avoid or to manage the failures that could result from the new regulations, and how can we better, learn from Asian markets, since they are, 3-5 years ahead of us?
In today's interconnected world, there's always room for learning, like for regulators to learn from one another, to share their experiences, to work on policy challenges in fintech and innovation. For example, we're very active in the scene. We're part of the Global Financial Innovation Network, the GFIN network, which is led by the FCA, and a number of regulators around the world are a member of the network. And the purpose of this network is actually to share experiences and learnings. One of the biggest learnings that we have learned is that the whole ecosystem has to work in harmony in order for us to reach the goals of, for example, financial inclusion, customer centricity, sustainability. So there has to be this harmony within the ecosystem, internal ecosystem, before we go and collaborate cross-border.
Okay.
In terms of financial inclusion, because of the demographics we have in the GCC, they're a little bit different to the Asian market. We're not really concerned about the unbanked, but what we're concerned about are the underbanked. So we try to come up with solutions to serve the underbanked. For example, we're working currently with the GCC to interconnect the RTGS systems to have a single RTGS for the GCC. And at a wider level, we're also working at the Arab Monetary Fund to have a collaboration on having an Arab RTGC. And that, again, will work, for example, to aid in financial inclusion, to foster more, let's say, serving the underbanked population. In terms of customer centricity, of course, we have learned that as the #1 goal. Customer centricity today has to lay at the very heart of the financial service sector. In order for financial institutions to be sustainable, they have to put the customers' interests at heart.
Thank you, dear. We have 6 more minutes here. Any questions from the audience? Any inquiries? Nothing so far. Waleed, you're based out of Egypt, but you're looking to scale. You had your eyes set on Saudi, which is a very aggressive move because you're living in a mammoth and you're moving to a mammoth. What would make you decide Saudi versus Singapore if you're going to scale? Okay, let's say Promoth gives you $2 million and tells you, go scale. Where would you go? Saudi or Singapore?
I would still go to
So
Saudi.
remember, Najoud is here, but you're in Singapore, so ears and eyes on you.
Well, I'll still go to Saudi. Speaking of which, actually, we've been approached by very esteemed representatives of the Singapore FinTech bodies and ecosystem, inviting us to come here. And that's actually will become in our equation. But still, our eyes will definitely be on Saudi first as a first move, for so many reasons. Saudi is too big of an opportunity to miss now. Saudi is totally transforming. You cannot miss this stage in Saudi. Digital transformation, financial inclusion, and civil development is happening at an unprecedented pace in Saudi now. Second of all is, since Egypt is our headquarters, Saudi is one of the biggest remitting origination points to Egypt out of the $20+ billion that we receive of incoming remittance every year. 7.6 come from Saudi alone. Actually, 80% of the $20 million come from 4 markets: Saudi, Kuwait, Jordan, and UAE. So it's definitely Saudi now. The GMV, the gross merchant volumes of processed transactions for e-commerce in Saudi is one of the top in the region, second only to UAE. The population and access to banking and financial services is amazing. It's one of the success stories actually of Apple Pay, of how the adoption rate and the adoption pace of the society has happened in Saudi. So the early adopters population is very high there. So it makes the perfect combination of good market, big market, ready to move, supportive policies, and high merchant volumes.
You deserve the Saudi passport. More passionate about Saudi than the Saudis. We've got 3-4 minutes left. Ayman, wrapping comments from everyone. What's your message to the Asian fintechs out there? What would you offer them? What would you tell them that Egypt would offer as an opportunity for them to come and do business with the Egyptian banks and help you in your cashless agenda?
I will tell them you have the technology and we have the market. And we have the opportunity of having the government and the central bank and the other regulators collaborating together for their benefit, for their sake, for helping them to grow their business, but in a way that help the community and help the objective of the central bank for poverty alleviation and providing access to finance for underserved people.
Thank you. Najoud, how can you beat that?
Well, actually, I think we would love to see more of Asian startups bringing their knowledge and their know-how and the user cases and the proof of concept into Saudi Arabia, as Saudi is very determined to be the hub in the region for innovation and thriving fintechs. And most importantly, we would love to see Asian fintechs coming into partnerships and collaboration with local investors and other banks, and definitely, as we say, that fintechs need to collaborate more and form partnerships. So we'd love to see that from the Asian fintechs.
Amazing. Yasmin.
I would say to them that we are very receptive as regulators. We're very nimble. We're there to listen to your innovations. You can apply to our sandbox and learn more about our regulatory environment, about our business environment. That's from one end. From another end, I would say we have the right legislations in place to support startups. For example, at a nation level, we have issued regulations, for example, the bankruptcy law and the personal data protection law, and all those laws serve to treat or to benefit these startups. We have a huge, we take great pride in our human capital. It's our biggest asset, very talented human capital that can support these startups and work alongside them. And last but not least, we have access to one of the biggest markets in the whole of the MENA region, which is Kingdom of Saudi Arabia, and it's less than an hour across the causeway.
All right, and Promoth, you have presence in almost every market, so you're kind of independent. Any startup, any scale-up from Asia that's planning to get into the Middle East and North African market, what would you offer them, and what do you look for in each of these fintechs for collaboration?
I go forward the basics which I had mentioned about it. So you have problems. So even if financial inclusion itself is a problem, we could really bring them into the foray. That's one opportunity we could solve. Definitely solving the problem, be very pragmatic in terms of regulatory environment, understand the nuances in terms of scalability, and make sure that we build a commercially viable proposition is the tick box that we do when we make investments. And Asian fintechs can definitely look at this market to really solve the problems, and we can build a large enterprise out of that.
Thank you. And Waleed, we're time's up. Just one comment from your side. Let's assume that collaboration is at its best between regulations, and we've got passporting, open innovation. Where do you see PaySky in 3 to 5 years from now?
Oh, that's an interesting question. Basically, I would love to see PaySky as the predominant payment scheme for this region, connecting the different networks across different markets and making payments either for consumers or businesses.
So you're going to be a unicorn?
Hopefully so.
Inshallah.
Inshallah.
Thank you. Thanks a lot for the panelists. Thanks for the audience, and we'll see you soon.
Thank you very much.